Hi everyone, and welcome to Tuesday, where we look at the performance of the NZSX 50 over the past week. Before I do that, just that normal housekeeping, and this is for educational purposes only, certainly not intended to be personalised financial advice. So if you're wanting personal advice, you do need to go and talk to your own financial advisor. So let's have a look at the screen. Right, so I've got the NZSX 50 up here on the screen, and this is Tuesday morning that I'm actually recording this, so I'm a little bit later than normal, but doesn't change the outcomes. So last week, you can see here, there is just a very, very small, sort of a doji candle is what they refer to that as, which means that the market didn't really go anywhere. Because it's red, it did mean that if anything, it went slightly down. So it meant that the market opened and closed very, very similar to where it closed the previous week. You can see down here by the volume that there was very, very little volume, a little bit of a green candle on the volume, but not a lot of volume at all. And you can see this week it's actually, we're obviously only the second day into the trading week, but it is looking a little bit positive, which is great. We'll just go and put the indicators on, being the moving averages. And remember, if you follow me regularly, I like to use the 30, always use the exponential moving average. And then I also put on the 15-week. Nothing special with these numbers. They are just what I use all the time. And it's about being consistent with these. Like I just said, there's nothing special. It's about using the same ones regularly. And then it can, by using the same ones regularly, then it gives you an accurate picture as to what's happening. Whereas if you're chopping and changing with them all the time, then you're going to get different pictures regularly. So you can see here that basically the NZSX 50 market is trading very close to that 15-week moving average. So that can sort of happen a little bit when you get a lot of movement away, that the market can consolidate for a little bit, move back to those moving averages, and then continue its run on. Just looking at that, there's nothing that I would be sort of too concerned about. It looks like they're still both moving up, which is what we want to see in a market. I do know the States and Australian market last week did sort of come off a little bit. There was quite a bit of volatility actually in both of those markets, but we're not really seeing too much of that here with ours. So that can be a good thing. You also see here the ATR, the average trading range, that's coming down, which means that there is getting to be a little bit less volatility in our market, which can be a good thing. Let's go and have a look on the daily intervals just to see. Now this does paint a little bit of a different picture. You can see here that the 15 periods of 15-day moving average in this example pretty much skimming really close to the 30-day moving average. So we'd need to sort of keep an eye on that, because obviously in a daily chart versus a weekly chart, a daily chart does move a lot more quicker than a weekly chart. For me personally, I do use the weekly charts, but I will take a look at the daily ones just to confirm what I'm sort of seeing on the weekly. So that would be quite interesting just to keep an eye on that. The market obviously in the last few days has been trading below both of those moving averages. So we just need to see what sort of transpires there, but nothing too concerning really at this stage. For me, I haven't been entering any new positions, and the reason for that is there just really isn't anything. Even the shares that have been performing well, I've been finding that they have been moving sideways, so we're not seeing much movement there at all. We'll just go and take it over the 5-year period as well, just to have a look. And you can see really where the market is. You've got the dashed line there. I've said before, it's almost at the highs of all-time highs of our market, but we've still got a little bit further to go. The all-time high really, see my screen moved, was really at about 13,600, and that was back in December 2020. So we've got a wee way to go for that. So like I just said, we're not there yet. So I hope that helps. Really, it's not too much to report on, other than really just sit on the sidelines, hold your positions that you've already got, make sure you've got some stop losses in place, and let's just see what transpires with the market. There's a thing to remember with investing as well. There will always be opportunities. Those opportunities will change, and it's being able to be adaptable for that as well. I don't like to second guess markets. As I said before, I have stop losses in place, which means that if the market moves against me, I've got to stop for my individual shares and the market will naturally just take me out. It's great because it takes out all emotion. I don't have to suddenly think, oh, what if? Because what if might not happen. And I'm quite binary with my rules. So I hope that helps. And if there's any shares that you would like me to review, by all means, pop them in the screen and come back on Thursday and we are going to take a look at, let's go for Sky City. We haven't done Sky City, so we'll take a look at that. So remember, if there is any shares that you would like me to review for you, drop them in the comments. I do reply to everyone. It may not be straight away, but definitely let me know, and I'm happy to do what I can. Until then, take care.